Alright traders, welcome back. It is now day 17. You're one day away from graduation. We're going to start winding down today actually as well, but it's basically the icing on the cake. Today we're going to talk about my favorite setup of all time, the extension dip trade. You guys have heard me talk about it a million times. This is the trade setup that really has changed the game for me. It's provided me an opportunity to make a lot of money in the markets, and it's the most consistent setup that I can seem to find. And basically it's what I look for every single morning as I get on the charts. And so basically this is the topper to the strategy. This combines everything we've learned: support and resistance, volume analysis. It combines your extensions, your sequence. It combines your internals, your externals. It combines absolutely everything. And so, this course really was designed to do that. We were heavy loaded in the beginning. We were learning a lot of new information, a lot of foundational stuff, and then we pinpointed one little thing each day for the last really week, 7 days. And so today I'm going to talk about the extension dip for a couple of minutes, review a little bit, and then we'll get on to day 18. But an extension dip typically is seen easily on a three-wave move just after the high or low of point 2 is taken out. At this time I look for a dip in a three-wave golden zone move and trade accordingly. And so really what we're looking for is we're looking for the continuation trade in the golden zone, or in the, I shouldn't say golden zone, the extension dip. So here's an example. If I label this for you, this is origin, this is 1, this is 2. All right? Until this high is broken, I have no chance of a trade. I have no opportunity of a trade. When that high is broken, that's when what we call the extension dip comes into play. And so all we're doing is we're waiting for an origin to a 1 to a 2. We're waiting for this point 2 to give us the volume, okay, to break this high. Once this high is broken, internally, this is the setup we look for. This is where the money is made. This is why you've taken and purchased this course. This is our secret. So in this little area right here, this is where you're looking for your golden zone. This is where you're measuring your 100 levels. This is where you're looking at the previous structure, the volume analysis. This is where you're actually using trend lines and all sorts of good stuff. So all you're doing is you're waiting for this high to be broken. Once it's broken and it pulls back into the high, it doesn't matter if it breaks back below it. You're looking for a three-leg sequence. Okay? Same goes on the other side. If we have an origin, we get a 1, we get a 2. Once it's broken, we're looking for any three-leg back in. And what I mean by back in is if I were to zoom in here, pay more attention to right here, this area, this is identical to what you've learned. This is origin, this is 1, this is 2, this is 3. You're still measuring, and this is where your entry is at. So what you've been learning about is this small section. Now all we're doing is essentially zooming out and paying more attention to everything else. We're paying more attention to the bigger picture. And so what you do in this case of the extension dip, if we put this all together real quick to really round this out, is you are to start here. This is your origin, external origin. This is your internal here. This is your 1. This is 2. This is 3. Your take profit is the 100 level of this area. Okay? And then internally, this is your origin. This is your 1, this is your 2, and 3. Your entry is at the 100 level for entry, or of course golden zone, a little different. 161.8 is your stop loss. Okay? This is the magic setup. This is my magic pill, if there was one. This is what I look for every single day in the market. So you're waiting for those lows to break, and then you're waiting for the pullbacks to target the full extension. So you're targeting that external, and you're entering off of that internal. is what you're doing over and over and over again. So I want to overview a little bit before we hit the charts and make sure you didn't miss anything. To recap a little bit, the market moves in sequences or waves. We only buy or sell in 3, 5, 7, or 11 swings with trend. Each swing is defined when a full extension is met, and we talked about that. Now, when we measure a 5, 7, or 11, understand that it's going to be more difficult than any 3 swing that you've ever approached. The swings are defined as higher lows or lower highs depending on the trend of the market. Use a Fibonacci extension tool for all of these, and these are once again to recap how you measure. When you're in a 5, 7, or 11, you have to understand that truncation has occurred if that's there typically. If you're measuring a 3, we know that. We're origin 1 to 2. If you're measuring a 5, an origin of 3 to 4. A 7, as we know, depending on the truncation, it's either origin 3 to 4 or origin 5 to 6. And then on 11, it's always origin 5 to 6. Okay? Once again, with any trade, we must use the 100 level for our entry, and that's it. We're using a 100 level. And so we're always going to be using these pending orders, and the only time you change that is based off of what? The golden zone trade. That golden zone trade is providing you guys with chances and opportunities as well. Always take into account structure. Take into account volume, fundamental analysis, trend lines, retracements. Always, always, always take into account. The stop loss is also always placed below the 161.8 extension. And always use the structure. Go review that stop loss video if you forget, but use that structure to really define what your stop loss will be. And remember that the 1618 is still a key rejection area, and that if you get rejection candles off of that, you might be in for a surprise of a good rejection. And actually on the risk-free video, I showed you an entry where I entered off of the 1618. So this is very dynamic, and all you have to do is get used to measuring out these sequences. Finally, always pay close attention if a retracement is in a confluence zone with 161.8, and maybe enter off of that and adjust it accordingly. So we're always adjusting here. There's no one set way to doing this. Also, remember the golden zone area is where the 50 or 61.8 retracement is closest to the 100% extension. The golden zone trade provides the highest possibility or probability of rejection all the time. And so you're going to need to continue to use the golden zone as many times or every time if possible. The term risk-free also is important. It means that you're not going to lose any money on a trade. You're not risking anything. You're using the house's money, as it were. And getting risk-free can be done by moving our stops to break even, or taking out half the position side and moving stops to the recent low. Okay? Once again, do not overcomplicate this. You must practice this. Take 50% retracement of the recent swing to get risk-free. All right? Internal sequences, once again, are simple. They're just more detailed. You're going to measure them the same way. You're going to identify them the same way. And everything will be the same. And so there's always at least a 3-wave swing internally inside of every single external. Okay? And then finally, the extension dip. This is the setup that caps this thing. This is the setup that brings it all together. It tops off our strategy. An extension dip is of course seen when that number 1 is broken, but that number 2 shows that it's taking out number 1. Once again, all we're looking for in these segments are origin to 1, 1 to 2, and then once this high gets broken, you're looking for any pullback to get long to target the overall 100 level of origin 1, 2. That's all our setup is, guys. That's all we're doing. We don't have any magic. We're using technical analysis. We're using the numbers of the risk-reward ratio. We're using proper portfolio management to make sure that we can put ourselves in a place to make money in the markets. So what I encourage you guys to do is really start to take notes on these and start to get it down. Start to figure out what you're going to do to make this work. Start to mark up charts, because to graduate, you're going to have to know how to do that. To graduate, you're going to have to know this information. To walk that stage in front of people where they can see that you put in the effort. That's very, very important. So I'll see you guys back on day 18, where I'm just going to kind of recap once again, put everything together for you guys so you remember everything from the beginning. These are just some good overview points here from the extension dip as well. If you made it to this point, I'm proud of you. Most people do not make it to this point. You know, I've been consulting for years, and I don't talk about too much about my own personal stuff in this, but I've been consulting for years, and I can tell you right now that the people that actually finish the course, it's an astonishing percentage, extremely low. Most people do not put in the effort to get to this point. You listening to me right now is a big deal. And, you know, for a person that's gotten through this point, I'm more prone to answering your questions and helping you than a person that's on day 3 and saying, I don't get it yet. You've taken the time to really walk through this. You've taken the time to get it. So I'll see you guys on the last day, which is day 18. I'm proud of you.